Hey everyone, thanks for joining us today to talk about arguably the hottest topic that's out there right now, at least from our perspective, and that's Bitcoin ETFs. By quick introduction, I see we've got pretty good crowd already, so I'll go ahead and get started. But by quick introduction, my name's Jerry O'Shea. I'm head of global insights at Hashdex, and we've got two great guests, especially to talk about this topic here today. Samir Kerbage, who's the CIO here at Hashdex, and Mike Venuto, who's the CIO at Tidal Financial Group. And before we do get started, I'll do the two very quick administrative reminders. First, this webinar is for educational purposes only. For any product-specific information, please refer to the appropriate prospectus. And then I did want to mention that we'll save some time. I think I'm going to aim to save maybe 20 minutes or so at the end for questions, because I know with everything going on with the ETF drama right now that there will be a lot of questions. So I'll make sure and save some time for those questions at the end of our talk here. So Mike and Samir, first of all, you guys both look rested, which is shocking because I know you're not rested at all, and maybe the least rested you've ever been. But anyways, I think that let's actually start just with the kind of the most entertaining, I guess. I don't know if that's the right word for it, event from yesterday, and that, of course, is the hack of the SEC's website. Samir, you were on Yahoo Finance TV at the time. You started the whatever it was 6-minute interview with them telling you that ETFs had been approved, and it ended with them telling you no, it's all been a lie, it's a hack. And so I just obviously it's a little bit of the elephant in the room right now. So I just, Mike, wanted to ask you, I mean, does what happened yesterday change anything in terms of the SEC's plans for what they're doing, or want to get kind of your thoughts on what transpired yesterday?
Okay, so yesterday was cuckoo bananas. Like, I don't know how else to explain it. It was stranger than fiction. I saw the tweet and immediately started looking for 19B4s because that's the normal process, right? Like that they would approve the 19B4s and you'd see who's there and if there was anybody that was left out. We feel very strongly that the 19B4 for the Hashdex DeFi fund to convert it to spot is going to get approved with everybody else. But that wasn't there. And I was like, wait a minute. Nothing has been normal in this process. So why not them have this crazy tweet to announce this? But I was like, it just doesn't make any sense. I'm scouring the SEC website. So it was just very strange. And my immediate thought was to tweet out that Bitcoin has never been compromised. But then I thought I don't want to poke the bear, right? Like, I'm sure they're dealing with enough right now, and we still have some active filings and conversations going on with them. But man, you could not end this 10-year saga with a more strange prelude to what's coming.
Yeah, I think it's obviously been a crazy few days, a crazy few months, and like you said, it's really in a lot of ways been a crazy decade. But with that kind of backdrop, Samir, can you maybe just give an update on where the whole approvals process stands in terms of what we know now? And there's obviously a lot of chatter on Twitter. And because it's Twitter, it's might need a little bit of fact checking. So would be interested in your thoughts on where things stand, where we are right now.
Okay, so there's a lot of rumors out there and a lot of like noise on Twitter. What we know for a fact is that today is the deadline for R21 shares. Okay, so today is the last day that the SEC has to disapprove the product if they're willing to disapprove. Okay, if they don't disapprove today, then starting tomorrow, you can assume that the listing rule was approved. Okay, there are some processes that the SEC can use to delay this if they want, but we don't expect this. Based on all the interactions we had with the SEC over the coming weeks, we believe those filings are going to be approved. Like a large portion of those filings are going to be approved. And based on what they have been asking issuers, looks like they're going to approve everyone at the same time. We also have no clarity if they're going to just batch all the 19 before approvals at the same time. Like later today, they're going to just publish out, I don't know, 5, 10 approvals at the same time, or if they're going to approve this over the coming days. Okay, it's just too much paperwork. Like each of those filings, each of those listing rules are like 200-page books, and they need to write approval orders. So we don't know. We just don't know what's like how they're going to proceed. This is unprecedented. It has never happened. Having so many issuers lined up to launch a product, and so what we know is that we should expect a 19 before order today, approving or disapproving ARC21 shares, potentially approving or disapproving other products as well. As soon as those listing rules are approved, then the issuers can start working with CorpFin, with Corporation Finance, the other division of the SEC, to make those S1s effective, so that they can actually trade the product and start trading the product. Okay. Also, those products are not trading, and rumors out there like say that those products can start trading as early as tomorrow. If it's going to happen tomorrow, then they need to go effective today. So we need to be like keeping track of like how the issuers are going to file S1s over the coming hours, asking to go effective and start trading tomorrow. On our like filing specifically, I think it's important to highlight that this product DeFi is already trading. It's already a Bitcoin futures product, so it's already tracking Bitcoin. And as soon as we get both approvals from the SEC, we're going to transition that exposure from futures to spot. So products already like trading, there's going to be no change, no disruption to the products. Current shareholders would just benefit from a better tracking of the benchmark product.
Yeah, maybe just a follow-up to, so how does Hashdex sort of fit within, you mentioned we're on a little bit of a separate track, right? And can you talk a little bit about how Hashdex fits within the group of issuers that have these filings out there?
Yeah, so I mean, we have a filing out there, a 19 before filing with the SEC, an S1 process with the SEC. And like I said, our process is fundamentally different from all the other issuers. And there are two major components of this. The first one is that the fund is already trading. It's already an ETF. So it's not uplisting, not changing structure, or not launching a fund from scratch. It's just a strategy change. So we're just changing the fund's portfolio from Bitcoin futures to spot. That's one big difference. And the other big difference is that the investment strategy of the fund will not be limited to only a spot Bitcoin. We're planning to perform cash creations and redemptions by leveraging the futures market, the regulated futures market. So we're going to buy Bitcoin futures contracts and then exchange that for spot Bitcoin. We believe that this is a more stable, more scalable setup to do cash creations on Bitcoin, considering the current market infrastructure in the US, considering how broker dealers are limited in terms of how much they can trade Bitcoin. We believe that this is a path that will bring more market makers and more authorized participants to trade, and will allow us to execute the fund strategy with a better tracking of the Bitcoin index. So those are the two main differences of the approach that we're proposing. And this makes our product being like considered in a similar track, but like not necessarily on par with all the other issues, because all the other issues are basically asking the same thing for the SEC.
Yeah, Mike, I don't know if you want to add anything in terms of how you think about differentiators with DeFi.
Yeah, absolutely. So, I mean, I think that the number one thing is it's trading, right? If you think the price of Bitcoin is going up and you eventually want to own spot, the only thing you can buy now and get that is DeFi, right? BitO is in a 40-act structure. It cannot convert to spot. I guess you could buy GBTC, but I wouldn't recommend it. Who the hell knows what's happening there? And it's way more complicated and way more expensive. So, I mean, that's number one. I think number two is, I kind of mentioned how nothing has been normal. Nothing has had precedent in a lot of what we've seen going on in this process, right? Like, there's two things that have to happen that Samir mentioned: a 19b4 approval, which is a rules change approval that allows for ETFs that hold spot Bitcoin to list on exchanges. We think that's likely today, and likely most issuers that have applied in that group that's in the Coin Turkey Derby or whatever it is, right? Then there's the S1. When this fund originally launched, it didn't even get comments about its S1 until after the 19B4 was approved. So there is no clock on S1s, right? There's no requirement that they approve it today, tomorrow, or whatever. They can still say, all right, we agree with the rule change, but fix this glitch, fix this, fix that. Due to all of that and all the unprecedented stuff, I don't think that most of these cash spot Bitcoins that are trying to launch are coming out with the optimal product. They're coming out with compromises. Because we were already live and because we're asking for a change, a lot of those compromises do not negatively impact us because we're going through an existing regulated market on the CME and essentially exchanging liquid futures that we've been trading for close to 2 years for spot Bitcoin. It's just an added feature to the existing structure.
Yeah, I think I might shift gears here just a little bit, because before we get too deep into this, I do want to kind of touch upon, Mike, this is a question for you. So obviously if you're following Bitcoin, you're following this debate very closely. If you're an ETF nerd like yourself and others, you're following this very closely. For those people that are not following, investors in particular, advisors that aren't following this that closely, which is most of humanity, is there how would you say, like, what is the impact of a Bitcoin ETF, right? And I think that's probably, something that, like I said, I want to kind of get that out there early in this conversation before we get too deep into the weeds of everything that's helping. But if I'm an investor looking at this Bitcoin ETF, trying to make sense of all of this, what are the things that I should be thinking about?
Yeah, all right. So early on, and I mean, I really haven't changed my opinion on this. Bitcoin doesn't need an ETF. ETFs need a Bitcoin ETF, right? Like our industry, it talks to traditional finance. If you're somebody who wants to go be your own bank and believe in everything that Satoshi wrote, 15 years ago and the whole concepts, I mean, I have a lot in cold storage and cold wallet. I know my seed phrases. I know what I'm doing, but I'll still own the ETF because there are parts of my life that are in traditional finance that I want it there. So what does it do? The futures ETFs, like what we have today and what ProShares did, gave access to certain retail crowd that wanted to own it in those places. What Spot's going to do is give that real access to institutions, right? That's why BlackRock's in the game. Um, uh, we're in the game because we believe in this concept. We believe this is the future. We believe the only thing that can replace ETFs is tokenization, and this is the bridge there. But the main flows that I think everybody's thinking there's going to be a bunch of retail flows. I think a lot of that already went into BITO or does it itself, or went into DeFi or does it itself, or went into Block or does it itself. I think the big money that's coming is institutional money. It's been afraid to go till it was spot. It was afraid to go until they felt there was a government rubber stamp. And I think that's the flows we're going to see.
So Samir, the Hashdex has had a spot Bitcoin ETF in Latin America for almost 3 years now. So any kind of lessons from what we learned in terms of managing that spot ETF that you think apply to the US market?
Yeah, no, sure. And I think two things that just complementing what Venuto said about institutions. I believe we're building a bridge between like TradFi and crypto and this new financial market infrastructure. One of the ways of this bridge is bringing crypto exposure to traditional investors. That's where ETFs are in. You have the other direction, which is bringing traditional financial products to the crypto market infrastructure, and that's where tokenization comes in. So those two lanes are essential to integrate those two market infrastructures and create the future, okay, or integrate this new infrastructure and make it easier for the society to adopt crypto. And right now, most of the hedge funds in the US, they cannot trade Bitcoin. And I mean, that's why you see a basis trading on the futures. You see futures trading with a big contango, a big premium over the yield curve. And as soon as an ETF, Bitcoin ETF is available, those hedge funds are going to start going long Bitcoin through an ETF and short futures to compress that spread. Okay, so we can expect like short-term flows just for this hedge fund, like trading, this hedge fund arbitrage, which is institutional money. And then you have the other type of institutional money, which is more the long-term strategic investment, the pension funds and all. For that type of investor, ETF is the ideal structure. So this in Brazil. So three types of investors that we saw that ETF was transformational in Brazil. The first one is financial advisors. Okay, so they manage most of the wealth. I think here in the US, the estimate is around 40% of the wealth management industry is like advised by financial advisors. In Brazil was the same thing, and we saw like something like 6 to 10 months of steady inflows from financial advisors. Okay, right now in Brazil, I think close to 80% of the financial advisory shops invest in hashtags products, mainly ETFs. Okay, this has been like a huge transformation on how retail investors from different sizes have access to crypto, to Bitcoin as an investment opportunity, not a speculation, but as a small allocation for the long term. The second one was hedge funds. So hedge funds could not trade crypto. The Brazilian hedge funds could not trade crypto directly. Once you see an ETF going out there, they started trading, and they're starting doing a lot of arbitrage trade and different trading strategies, complementing the trading strategies with Bitcoin and crypto trading. And the third one is more like the institutional money, which we are seeing coming in as well. I feel that we're going to see in the US the same thing that we saw in Brazil 2 years ago when the ETFs were launched. And it's going to be, since the US is the largest capital market on the planet, I think this is going to be transformational for Bitcoin. Things that we learned in Brazil, like fees is not always the most determinant thing for especially for crypto products. And I understand how people are fixated about fees in ETFs, because normally when you're talking about equities ETFs and fixed income ETFs, they are very straightforward. Okay, so it's really like the market infrastructure is mature enough to support those fees being compressed. In crypto and Bitcoin, the way you manage those funds and the way you proceed with creations and redemptions and you do custody and all, it's still improving. Okay, so like we believe that in the end, investors look for fees because in the end they want to track the benchmark better. And for crypto ETFs, the fee is not the only determinant thing for tracking the benchmark. Other things may affect, like tax treatment, like performance, liquidity on the secondary market, premiums over NAV. So those things, they all make a difference in your end result in your portfolio. So we saw that in Brazil, and also expecting to see this here.
You mentioned the F word in this debate, and not fees, but flows. And so I think it was yesterday or the day before, Standard Chartered came out with a report suggesting that ETFs could see 50 to 100 billion in flows by the end of the year. And so I want to get both of your guys' thoughts on this. Maybe Samir, I'll start with you. With the upper range there would push it to the level of like gold ETFs, and I just want to get, is that kind of a crazy estimate, or what are you thinking in terms of what we'll see for flows into these potential ETFs?
I mean, everyone's fixated on the short-term flows, and that's not really what we're looking for here. On short-term flows, we can expect a few $1 billion just from hedge funds, like I said, just like basis trading, arbitrage trading between futures and spot. Like you can expect something like $1 or $2 billion coming in that type of flow in the short term. But over time, and the financial advisors will deploy this money over time, institutions will take a few months or years to allocate. So like the way I see is that it's very possible that by the end of the year, the assets under management, the AUM of Bitcoin ETFs is going to be higher than the AUM of gold ETFs. Just because like Bitcoin is a more popular investment. It's like we have the halving coming here, so that's historically positive for prices. And I think when prices go up, like the demand normally goes up as well. And like it's we're not very far away from having more than $100 billion in AUM come on Bitcoin ETFs. So we're very optimistic on the flows over the coming months. Okay, first few days, I know everyone will be keeping track on how those funds go, but the first few days will mostly come from seeds, like from investors that are still lined up, that are already lined up to invest. But the organic flow will come over the coming months.
What do you think, Mike? Do you agree with Samir? You think the 100 billion in new flows, but this year, is that feasible?
I think that's high, but I think it's possible not just from flows, but from appreciation, right? Like what makes this different, what makes spot essentially different is you actually have to buy the stuff, right? And it's if let's say we get 5 billion in across 10 products over the next 2 weeks, half of that is going to be seed that's probably already in it and it's just moving to another vehicle, right? BlackRock shuffling the deck or whatever. The other half will move the market most likely, right? There's only so much there's no FTX to let people short 1,000 times anymore, right? Like so they'd have to do it in regulated ways with real margin and all that here. So it's not that easy to fight the tide. So I think that 50 to 100 billion is possible, not just from flows, but from appreciation. Like, look, Grayscale didn't raise 20 billion, right? They got in really early and they made a vehicle that nobody could get out of. I still don't know why they're turning it into an ETF. I think it's probably the dumbest business decision in history. Like they have an asset that can double and triple over cycles that was captive. I don't get it. It is what it is. So yeah, I think we're going to see the flows. I think it's going to be institutions that move the needle. And I don't think people should get too excited about how much that flow is right off the bat, because I do think there's going to be skeptics that are worried about sell the news. I do think there'll be skeptics that are worried about, does this work, right? Like almost all the other funds are using the same custodian and same process and same AP. There's some concentration of risk there, right? Like we did things different for a reason because we didn't want to be bullied into making bad decisions just to, win a, a race that is symbolic. We want to get the best product out there.
Yeah, and I know, Samir, you talk about the kind of the demand shock of an ETF approvals going into the new year with a potential supply shock as well, like with the halving coming up. So, Mike mentioned the appreciation being part of this equation, and so it probably does make sense to just kind of pause and talk about the investment case for Bitcoin in 2024. So I don't know if you may want to share a few thoughts on how our team is thinking about the investment case for Bitcoin in this year.
Yeah, sure. And I think it's essential to take a step back and see like why all this excitement about Bitcoin, right? If you keep track on the news flow, that's pretty much speculation. And the way we see here at Hashtags is that Bitcoin is a generational investment opportunity. Okay, our investment thesis for Bitcoin is that this is a new kind of store of wealth, a digital native way to store wealth. And this is still very emerging in our society. This is still far from consensus that Bitcoin can be a good store of wealth. Okay, the big users of store of value are central banks. And we just saw like one comment today, like from one of the central bankers saying that like ECB will probably never buy Bitcoin and will never put Bitcoin in its balance sheet. So you see, we're far away from central banks, which are the most relevant users of store of value, considering allocating to Bitcoin. And what we think is going to happen is over the coming years and decades, that's going to be a generational shift. We're seeing this generational shift happening. I think this ETF is part of the generational shift that is happening. That like uh, a new workforce, a new like society, a new generation will see Bitcoin as a good alternative, as a store of value. And that is the big opportunity on Bitcoin. It's coming from a non-consensus to a consensus store of value. It's coming from the European Central Bank saying that they will never allocate to Bitcoin, to the European Central Bank having Bitcoin as part of its balance sheet because they have demand for store of value, and gold it's just less efficient. And if you talk about environmental costs, like gold is way worse than Bitcoin. The gold mining industry is way worse than the Bitcoin mining industry. So I think that's the big opportunity. And the big risk is like when that's going to, so how long it will take for unfold, right? So how long we're going to see this generational shift, this transformation. This is what makes Bitcoin so exciting. And the way we see the investors should be looking at this is as a strategic long-term allocation. So forget about short-term flows, short-term prices. Is it sell and use, whatever? I mean, a small allocation to Bitcoin. Take a 3+ years in your investment horizon on this, and just just wait for this generational shift, because it's happening. All the information, all the confirmations we see on a day-to-day is that this generational shift is happening, and it's happening faster than we anticipated. So all the tensions we see, all the geopolitical tensions, the macro tensions, like the like all the things we're seeing, they only reinforce the need of having a digital store of wealth, and a store of wealth that any citizen can have access to. So all like we're only seeing confirmations for all the last few years. And when you look at the like medium term, we have like a supply shock coming, which is the Bitcoin halving coming around April, May. That historically had been a catalyst for price appreciation. We believe that history will rhyme again, is rhyming again. I wrote about this 1 year before. Last year, in January last year, I wrote about like the recovery phase of Bitcoin, that the cycles were looking like they were exactly the same, and they were repeating itself. So it's looking like it's going to repeat itself. So a supply shock of Bitcoin going down, and a demand shock now that we hopefully we will have products that institutional money can come in, financial advisors can allocate, and hedge funds can trade and make the markets more effective.
I think, Samir, every time we do one of these calls, I say that, price predictions is not something that we want to get into. And then I ask you about price predictions. So apologies, I'm going to do that again. And I know it's not something, as you mentioned, short-term prices are far more insignificant relative to the longer-term investment case. But there's a lot of people out there making their predictions about where the price of Bitcoin may go immediately after the ETF, through the year, through the next 2 years. So maybe if you could just talk a bit about how we're evaluating sort of the short to midterm and thinking about prices.
Yeah. So I mean,
I'm glad he went to you on this
I
one.
was going to say, but then I'm going to go right to you,
No.
Mike, afterwards.
Go ahead, Samir.
we have a few minutes to prepare, Mike. So what I can say, like, if there is a seldom news fact, how low it's going to go? Like, is it going back to $15,000? I don't believe so, right? It will go to 30,000, maybe, but it's very unlikely. But on the other side, if we actually see demand, if we actually see a few $1 billion coming in, it's important for people to understand that the market structure in crypto, the free float supply of Bitcoin is only going down. Okay, so it's not like you can like source $2 billion, $5 billion of Bitcoin in a few hours. Okay, that's going to cause a shock on Bitcoin prices. Okay, so if we see a strong demand, so news coming out like the SEC approves Bitcoin ETF, might come anytime now. What is the impact on prices? It's only speculation. People are going to trade on this. That's going to be pure speculation. After those products start trading, and we're going to see the inflows. The inflows are going to cause a significant price movement. So if Bitcoin goes down in the announcement, I mean, that's fine. Like, that means that we will be able to buy Bitcoin cheaper for our clients when that money starts to come in. So I think the real thing to keep track on to measure the impact is how much inflows we're going to see in the first few days, and whether Grayscale will be able to start the redemptions along with the other products being able to buy spot. Okay, because I think the consensus is that we might see some redemptions on GBTC. GBTC has a lot of Bitcoins, and that might give liquidity for the other funds to start buying Bitcoin, and then that might stabilize prices. If we don't see Bitcoin opening up redemptions at the same day that the other funds can start buying Bitcoin, we might see a significant shock on Bitcoin prices, but then can be a short-term price movement and then correction. But what tends to happen is that those things create like bubble-like movements where people will just buy the FOMO, unfortunately, and we're going to see like Bitcoin prices, like a accelerated positive trend. And then we're going to see another 60%, 70% correction after all the excitement. So that's how Bitcoin cycles happen. And this is very normal for any new technology, any new phenomenon in our society. It happens in cycles of bubbles and overexcitement and underexcitement. And I guess we're going to see like who's really in for Bitcoin, who's really in for the long term in Bitcoin after all this volatility.
Mike, I can't let you escape the question. Sorry.
Well, you let Samir escape it. I feel like he's a CIO who had he's had media training. He managed to say a lot and not give you a price. So I'm just gonna give a price because the last bull run. So like, look, this isn't our first rodeo with exposure to Bitcoin and crypto. Dan Weisskopf and I are behind the block ETF, so we've been tracking this stuff for 7 years. And on the last bull cycle, they had me on CoinDesk every other day. Not every other day, every other week. And every time Lawrence would ask me, what's your price prediction? I would just say 100K. I'm just going to keep saying that till we blow through it because it's as good as numbers anyone can pick, right? Like you got stock to flow, you got demand, you got halvings, you got all this. It's all obvious that this is worth a hell of a lot more than it is, or it's zero. I really don't think it's zero. So I think it's a hell of a lot more than it is. How long? I don't know. Like every time my wife asks me, how much of this do we have? And I say the number and she goes, but you'll never spend it. And she's right. I'm not going to spend it. Like I want to own a part of the thing that changes the future, right? That takes the money out of Jamie Dimon's hands and puts it into my kids. And so, yeah, 100K, there's a straight answer.
Hey, it's something. We'll take it. We'll take it.
That's not financial advice. That's not telling anybody to go buy it. None of that stuff. But I believe that's going to be a number in the rearview mirror by the time I'm ever thinking of selling any of it.
Yeah, I have kind of a related question. So how will this ETF or will these ETFs change the perception of Bitcoin among investors? And like, is it going to happen very quickly? Do you think it'll still kind of drag out over years as people start to understand what this technology is and isn't and that sort of thing?
So I'm going to go first and then Samir can jump in. My biggest concern and like the ethical conundrum I wake up with every day in this is we chose to work with Hashdex on this because you're telling the message, you're telling the education, you're talking about what the underlying technology is. Like it's not just, hey, get them access. What a BlackRock or I mean, I can't say Van Eck at least tries and Wisdom Tree at least tries, but a lot of these are just trying to commodify it. And that takes people away from learning about the technology and how it changes things. So I do worry that, zero fee, just commodification of this beautiful technology prevents or quiesces people from doing the education and learning like that they need to because this structure will replace most of accounting in finance, right? Like this is the next iteration. The ETF doesn't help it get there. It might actually slow it down. It just, but you need people to be interested. Number goes up is what gets people interested. If you don't have a firm like Hashdex behind it explaining why number went up, then we're not doing well by the crypto community. So I don't know, Samir. I'm always negative Nancy here, so except when I give a price.
Yeah, and I think the big effect is that like right now, most of the financial professionals, financial professionals, they can avoid having Bitcoin conversation with clients because they cannot invest in Bitcoin. Okay, so that's an easy one to dodge. Like I don't care about Bitcoin. It's not something that I can invest in. That's not under my mandate. After Bitcoin is listed, and we have like a Bitcoin ETF trading smoothly, that's going to be one option out there for basically all investment professionals around the world, to be honest. And so having this conversation around Bitcoin, you have to consider, you have to study this. You need to have an opinion. You can be short, you can be long, you can be neutral, but you need to have an opinion. Up until now, most of financial professionals, they could afford not having an opinion and just staying out. I'm out. I don't have an opinion about this. But after we see, like now that we've seen a product trading, like financial professionals, most investment professionals will need to have some kind of opinion about this. And I think this is one of the big transformational milestones and one of the big milestones for Bitcoin. We're going to see this in the history of Bitcoin, US ETFs as being like one of the milestones for its maturity, because we're going to see more professional conversations around Bitcoin, not just FOMO and like I would say short-term noise and people like to the moon and all that. Like we keep seeing this, but now we're going to see Bitcoin being more of part of the financial professional conversations.
And I think this might seem a little bit of like a self-serving question, but we obviously feel strongly that the sort of crypto native, digital asset native approach to asset management is very important in this space. And Mike, I know you all work with a ton of thematic asset managers, and so I'd be interested just in kind of your overview of the benefits of doing that. You touched upon it a little bit in mentioning your partnership with us, but and kind of if you could maybe drill down even a little bit more about why an investor should choose a thematic asset manager in whatever asset class over sort of the massive big folks out there.
Yeah, I'm going to use a slightly different term instead of thematic. It's like specialty, right? So look, BlackRock, Wisdom Trees, Invesco, they'll throw any thematic concept out there or any ESG concept out there. If it doesn't hit assets, they close it. Okay. You take somebody small who their life has been about real estate investing and they've been writing about it forever. And they know everybody in the industry, or somebody who's understands power futures, or somebody who's been trading commodities, including crypto commodities, forever. Those don't close. Those don't get schlocky management. They don't get treated like some passive crap. The people care about what they're voting on the underlying securities. The people care about the education in it. So it's always amazing to me when somebody's like, I don't want to buy this ETF that's got 60 million in it because it's new and it could close. The odds of that one closing versus one that's similar at BlackRock with 200 million is almost nothing. Like the BlackRock will close a $200 million ETF in a second because that's a failure to them. The person with 60 million who actually believes in it and treats it well and cares and puts the effort into meeting managements, to doing the research, that's the one I want to go with. That's what we look for on our platform is the people that are in this because they're specialists in their field. Otherwise, again, you're just commodifying an asset. I mean, look, we saw this news that BlackRock's laying off 6,000 people. They're all in ESG. That's we're ESG. Nah, not anymore. Like they're in it just for the money.
Any, I don't know, Samir, if you have any additional thoughts. If not, oh, go ahead. I don't want to interrupt you.
No, I think Mike said it all.
Yeah.
Like the work we've been doing with our clients and has been like an educational word. We see hashtags as a crypto evangelist. So we've been around like since 2018 talking about this new asset class, trying to educate investors, trying to go through the thick and thin. Like when Bitcoin is going down 80%, we're there to tell investors that this is a long-term allocation. You need, like to see this from the fundamental aspect. But when Bitcoin prices are going 5x, we're also there telling investors, hey, this is a long-term investment. Don't overinvest. Remember, small allocation, long-term investment. Maybe it's a good moment to rebalance your portfolio. So we're there to guide investors throughout those things and throughout all those cycles that we see in this market. All the mass we saw in 2022, we were together with our clients talking about giving context on what's happening and how that changed the investment thesis that we have. So I think this is one of the things that you only get with a crypto specialist. And if you're just having another product on the shelf, you're not going to get that kind of education. So I think that's where the thematic asset managers, the specialists, they differentiate from the big players. And it's going to be clients for different types of products. There's some investors that will only care about fees and will go to the lowest product. They don't even care who the issuer is. Some investors will care for brand. They want to go with the large brand with a BlackRock, and that's okay. And some investors, they want to have a relationship with the manager. They want to have a relationship to understand better the asset class and to help their clients to navigate this asset class. So that's where Hashdex is positioned.
Awesome. And I think we can turn to questions now. We've got a bunch in already. The first one is for you, Samir. It's really, I think, around the investment case for Bitcoin. But the question is, can you speak about your experience in Brazil, and in particular how emerging markets view Bitcoin as a necessity? And then they asked how many customers we have as well.
So Hashdex right now has a little more than 200,000 investors in Brazil. It is the second ETF with the largest number of shareholders in the country. And we achieved that in a few months of operations in 2021. So that was a huge success. So Hash 11 right now, the ETF that we have tracking the Nasdaq crypto index, and it's important to highlight, this is a crypto index ETF. Is not just Bitcoin. It's been trading since 2021, so it has 10 assets on its portfolio. And this is more successful or more popular than the Ibovespa ETF, the country's equities benchmark ETF, right? So we can see that there's a lot of demand there in Brazil. The products were very successful. We have a leadership position in Brazil. Trading execution, we've learned a lot with trading those ETFs over the few years, and we're bringing all those things that we've learned about how to manage effectively, efficiently crypto ETFs. We're bringing all of this to this product and working with Mike, our partners with Tidal, to make sure that this is the best product for US investors. And as emerging markets seeing Bitcoin as a necessity, if you look at a lot of emerging markets, Bitcoin is already on its all-time high, right? So if you compare in the local currencies, and I think the thesis of an emerging store of wealth, it's easier to explain in emerging markets, because in emerging markets, we're used to seeing inflation going up. We used to see governments, just not being able to manage their balance sheet. And in the US, this is a new conversation. This is something that we've been seeing for the last few years now. But if you look in Brazil, Argentina, Venezuela, countries in Africa, Turkey, this is part of the day-to-day life of most of the citizens. So it's easier for them to appreciate that now you have an alternative, and you can save part of your wealth in something that can really preserve value over time. And it might not preserve in dollar terms in a shorter period of time, but even for shorter periods of time in their local currency, this is better than holding their currencies. So I think this is a very important point. We tend to see this adoption being way more significant on emerging markets.
Mike, the question, I think I'll direct this one at you. It's about it asks if if you're a financial advisor, and once we move beyond the approval hype that we're in the midst of right now, how do you actually start this conversation in terms of talking about Bitcoin, talking about a Bitcoin ETF? Can you share some thoughts there?
Sure. First off, the client's probably going to start it with you, and most likely that, if a client has $1 million with you, has 200 or 300K of crypto outside of you that they haven't been telling you about, or have mentioned it to you and you haven't been able to give them any kind of solution. So, it's kind of easy that the clients are going to start asking you. Now, my first interaction with this stuff was early 2015. We had at that time an ETF that tracked the ETF industry, and I got asked, "Hey, what could threaten the ETF industry?" And I said, "Blockchain and tokenization," and people laughed at me. And I was like, "Well, I'm on to something." And so for our wealth management clients at that time, we started to allocate 1% to GBTC, and every time it became 2, we went back to 1%. And so ran that for about a year and a half. Then we had an SEC audit, clean as a whistle, but every question was about, why do you own this GBTC thing? And why did you sell it for this client and buy it for that client that day? So it was a cash flow. So to this date, it's not been easy for financial advisors to do anything here because the products have been inefficient, right? I'm very proud of what we've done with Block. I'm proud that we have DeFi out there now, but the historic products were pretty inefficient. And even if you use them properly, the SEC asked you questions about them. The ETF, in the wrapper it is now and being approved at the big institutions and all that, I think it takes a lot of that away. I think advisors are still going to have to add some risk disclosures to their ADVs. But I think it goes back to exactly what I said in 15, 16, 1%. Start there, right? Use it as a return enhancer. Use it the same way you would use gold, but you don't need as much of it because it's got such a higher Sharpe ratio and inverse correlation to so many things. So, with it's been the same answer we've been using with Block for a long time, for 6 years, right? Block, we usually say 5 because it's more equities and less of just the commodity exposure. But you start there, 1% is going to change your life, right? And if it doesn't, and I'm wrong, it's not going to change your life, right? 1% is not going to hurt you, but it can massively, massively help you.
We have a question about custody, and I realize we didn't get into a lot of detail about that during our conversation. So the question is around, aren't the ETFs that have filings required to keep client funds in qualified custodians to satisfy the custody rule? So I think it might, I don't know if you can obviously answer the question directly, but maybe just to talk a little bit about the custody of these products and how that's working.
I think we have to be careful on this one until they make everything public. The current fund custodies at US Bank will still have custody at US Bank for the cash and the futures. And then our public filings say BitGo as our primary custodian. We absolutely intend to have multiple custodians. I don't know if there's anything else we can say that's in the public filing. I don't know, Samir, what do you think?
Yeah, what we have to say is already out there in public filing, like in general, like how hashtag structured custody is the same. Like we have a policy since 2018. We tend to work with the best service providers out there and to diversify our exposure across multiple custodians. So hashtags, in all the products we have globally, we have a network of custodians, and we have our own policies around managing the exposure to each of those custodians according to a set of rules and a set of risk assessment that our team it's constantly monitoring. So that's what I can say, like in terms of what we do and what we bring into this product.
We've got a couple more questions. I know we just have about 10 minutes left. And the next question is with regards to Bitcoin itself, and whether or not, Samir, this might be a good question for you, but whether or not we think that Bitcoin ETFs would hinder the decentralized nature of the Bitcoin network, given that there'll be more of these large institutions in the market.
No, not at all. Like that doesn't change anything on mining, which is what makes Bitcoin decentralized. Like ownership doesn't really, like, I think the brilliant thing about what Satoshi Nakamoto designed is that no one can control the network, nor even, you know, the governments. And if you have 30% of the Bitcoins out there, you're not going to control the network. You're not going to control the monetary policy. You're not going to control inflation. So I don't think that changes anything in terms of how Bitcoin can be decentralized. It doesn't change anything on the thesis. And I think people tend to criticize, oh no, but Bitcoin was supposed to be decentralized and now ETFs are going to centralize it. I mean, not really. Like Bitcoin is Bitcoin. Like the fact that most of the gold supplies with central bank doesn't make gold centralized. Gold is a mineral. It's an element, and Bitcoin is just a digital element out there. So I think that just doesn't change anything.
We've got so there's a handful more questions. I'm looking at them and they seem to be things that we've really touched upon. And knowing that you guys are going on, I think maybe just a couple hours sleep in the last week or so, I might forgo putting you through repeating yourselves here. And I think it's probably, you know, maybe this will give you the opportunity to take a 5-minute power nap or something. But we can end the call a little bit early before the hour. I did want to just mention that Samir and I are in New York right now, and for anyone that is on the webinar now that's going to be in New York, we are having an event at the New York's only Bitcoin bar tonight, PubKey. If you can't make it in person, we'll be streaming it live from our YouTube channel, as well as from you can get more information from our Twitter handle at @hashdex. And yeah, these are exciting, crazy, and I think times that we will look back on and really appreciate. So Samir, Mike, thank you guys as always, and hopefully in the next 7 minutes you can take a quick cat nap and be on to the next thing. So appreciate
Sounds
it.
good. We appreciate it. Hope to see everybody.
Great.
Bye-bye.